All right, good afternoon, everyone. Thank you for attending today's workshop, PTG Educational Series. Today, we're going to review the PTG Trader Toolbox indicator suite. I've gotten a lot of questions recently about what's contained in it, the workspaces and the chart books that we use on Sierra Chart and on NinjaTrader, but primarily on Sierra Chart. So I thought we would create a educational module where we can review what you see during the day and give you a better overall view and understanding of how we use our charts. Okay, before we get to those charts, industry regulations do require that we highlight compliance rule 2-29, which simply states that in summary, hypothetical performance results, some that you may see here, some trades that we've done on our screens have many inherent limitations, and trading in futures and derivatives on futures is speculative in nature and involves substantial risk of loss, and past performance is not indicative of future results. So with that said, let's move on to the charts and the Trader Toolbox. Okay, so we switched the screens and now we're looking at our main screen that you'll encounter in our trading room, and as a new user of the PTG Trader Toolbox, and we'll go over some of the features and graphics that we have here. So how I like to explain this overall is simply like take each instrument, and the three that we trade primarily are the S&P E-mini, the NQ, and crude oil, CL. And the way I like to explain this is think of each of those panels that you see there as a deck of cards. And so we're starting at the larger degree, and then as we flip each card over or change the page, okay, we start drilling down excuse me, into the execution, more granular type charts. Okay, so there's clearly a lot of information contained in each of these charts, but as we go through them, what I want you to just keep in mind is that though there is a lot of information that you see here on the screen, each one of these instruments and the design is exactly the same. So once you have an understanding of how the layout is in one of our instruments, when you move over to another instrument, it's going to be exactly the same, the layout. So you don't have to learn 3 different layouts. You learn one layout, you apply them the same way to any instrument that you want to focus on. Okay? So of the 3 instruments there, all right, again, tops down approach, you'll see the profile. Now down below, you'll see a white section, and that is referred to as our Scanalyzer dashboard. That is the area where the signals, the trade signals, setups, and conditions of each instrument is located. So we have 3 major categories of trade setups, and they're referred to as the ATR, average true range, stackers, both bull and bear stacker, our CCI crossover system, which is referred to as premium and discounts. And then within the context of those premium discounts, we have what are called extreme premium and discounts. Okay, and the premium and discounts are subdivided into standard premium and discounts and turbo premium and discounts. Now the course difference is turbo premiums and discounts are much more sensitive in terms of their frequency. Okay, and over to the left-hand side, to the far left-hand side, you'll see two windows. They looks like a little squiggly line, and then another line up here with a couple moving averages on them. These are referred to as our total market sync and our advanced decline sync. So on the top left-hand window, that is the total market sync. Now, what the total market sync encompasses is all the major indexes as if they were one instrument, and they're measured on 3 different time periods. Okay, so we use multi-time frame analysis to display all the indexes components as if they're one. So it kind of think of it as a market of markets, so to speak, right? As any index would. Okay. The section down below where you see kind of this squiggly line, this is what we call our advanced decline sync. Now, this measures the market internals, advanced decline line, up and down volume ratios, etc. And it displays them in a way where if you think about inhaling and exhaling in breath. So just sit there and just, we unconsciously inhale and exhale, but deliberately take a deep breath, inhale, and then exhale. Okay, so the markets, basically the internals, they're inhaling and exhaling the way this is displayed. Markets ebb and flow. Right? They accelerate at greater speeds, they decelerate, and they crawl. So what this particular indicator does is it measures the market internals as if it's a breathing entity. Okay, when the market is at rest and not doing much, then the indicator will display characteristics that will suggest to us that there's not much to do, market's quiet. And at other times where the market is expanding in much more robust directional movement with lots of activity, that indicator will adjust accordingly as well. So it kind of oscillates back and forth. You'll see there's somewhat of a mirror image of each other, or actually opposite. The top two here are referred to as the buy sync, and the bottom two is referred to as the sell sync. So the market kind of, think about it as kind of an oscillating sidewards back and forth. So inhaling, exhaling, so as the buyers are getting more aggressive, the sellers are getting less aggressive, and it kind of ebbs and flows. So that's kind of our depiction of the market internals as a inhaling and exhaling type of an entity. Okay, the more you watch it and get an understanding of how it works, it's an interesting indicator that in one fell swoop between those two, you'll see that the markets are actually increasing in not only activity but in overall breadth, all right, weakness or strength. All right, so the total market sync and the advanced decline sync together as if they're one. Now the one to the right of that, the title of that is the PTG OODA Loop Matrix, OODA, and that stands for Observation, Orientation, Decision, Action. And in our educational material, we actually have a video workshop on how to think in probabilities. Traders think in probabilities. So this is a particular decision technique that will help you in a structural way how to begin to think about the market's activity, about individual trade setups, right? How to actually walk through a defined process that will keep you focused on the important aspects of your analysis, whether it's market in general or a specific setup. So it's the OODA loop decision matrix. Now, in this particular chart setting, this is very new to us here in July 2018. And what I have done is I've put together a matrix grid down the bottom, which is you see where it says bias 1 through 7. Now these are 7 different metrics, both short-term and long-term, or short-term, medium-term, long-term factors that we believe are very, very important to having them in our favor, in alignment, and when they are, it kind of reinforces the strength of a potential directional move. Okay. Now we do have separate workshops designed specifically to talk about the 7 biases individually, and we'll pass those along to everybody. Next week, the end of July, early August, we will be having a workshop specifically on that. So if you plan on attending, great. If you can't, it will be recorded and uploaded to the website for future viewing. And so that's particular grid, as well as the individual charts in between, simply as a 3-minute chart. We have our dynamic fair value zone that we use, that outlines the channels, all right, up and down channels. The next line here, this white and red histogram, is a 15-minute momentum. We have the 3-minute momentum indicator here on the next segment. Below that is the cumulative delta, and the section just below that is the cumulative New York Stock Exchange tick. All right, and along with those, we have our biases down below. So together, this formulates a viewpoint of the market, which, staying in alignment with the primary action of the market, is our goal. We don't want to trade against the market action in any way. All right, we want to stay in alignment with what the market wants, and we want to trade in alignment, and that will offer us our best opportunity to be profitable. All right, so now let's get to that. That's kind of the background of the main page and the indicators and the Scanalyzer dashboard. All right, let's go individually with each of the windows. And as I said a few minutes earlier, they are all set up the same way. So as you can see here, we have a daily profile. Many of you are familiar with profiles. If you're not, we do have some information on the website about profiles. There's plenty of information out there if you want to search for it, if you're unfamiliar with it. I'm not going to go into the details of profiles. This webinar workshop is just for a layout of what you'll be seeing during the day, so to make your experience a little bit more informative. All right, so the day 1 profiles, this is our starting point each morning, and basically kind of providing us that 30,000 foot viewpoint of the market way above, seeing where the key support levels and congestion areas are, what the directional bias is, and we do see directional bias in there as well, and what the channels are. So you can see here I've outlined some bullish channels both on the NASDAQ and the S&P. And you can see in terms of the profiles there, you can see where the high volume nodes are over a period of time. So you can see this outline here, all right, of the profile. That is a multi-month profile, and then of course each individual day collectively. All right. Now, as we start moving down, what I'll do is I'll simply move each chart, and we'll examine each section one by one. Okay, in the next segment here, now what we've done is we've gone from the bigger 30,000. Now we're down to say 15,000 feet, viewpoint. So we're starting to drill in, zoom in a little bit more detail. And on Sierra chart, this is a great depiction of both the volume and market profiles separated from the overnight Globex session and then the RTH, regular trading hours session. And there's a lot of functionality to this through Sierra chart. You can do combinations, you can merge profiles to get a different picture. You can separate profiles. There's just an enormous amount of things that Sierra chart offers to utilize and to display the collected data, and to get a better understanding of how the distribution of trades are unfolding throughout the session. All right, so again, we start with our bigger picture, start drilling down. Now we start fine-tuning. All right, and what you see some levels on here, we have levels that we overlay on it are some of our 3-day cycle levels. All right, and there's information about the 3-day cycle, free information on the website for those interested in exploring more about the 3-day cycle. What's kind of interesting here in the crude oil is that we had a potential low and a potential high range for cycle day 1 outlined. Now these levels and targets, if you will, are outlined the evening before, right, around 5:30 for the next trading session, which begins Globex at 6 o'clock Eastern time, and they're valid throughout the whole session, the 24-hour session. So interesting that here on crude oil, markets auctioned down to very near to the possible low, and then auctioned up very near to the possible high. So the coming in today, cycle day 1, the upside potential high range and potential low range was already known, already outlined beforehand. We just didn't know whether or not the market would trade to those levels. But as you can see here, the market did respect those levels. Now that's not always going to be the case. Today was a strong day here in the S&P, and prices actually achieved and fulfilled and exceeded the 3-day cycle rally targets, all on cycle day 1. So we've seen this happen before in the past. It's a very powerful type cycle, and so the buyers held their ground yesterday and then rallied very strong today. So trends are still up. Bullish action is still very much intact, and that is the overall larger bias at this stage here, July 2018. Okay, as we do this workshop. All right, so this would be the next factor. So from here, these are 30-minute profiles. So from here, we start drilling down a little bit closer, 60 minutes, 5 minutes, etc. So we'll do that right now. All right, on our next segmented charts, and now again we're drilling down even further. So now these are 60-minute charts that we look at using volume profiles as outlines, but using now the bar charts or the candlestick charts. And what we'll start seeing on this, that there's we use the larger degree charts, 60 minutes, etc., to outline larger target levels. So the levels that you see on here are based upon the 10-day average true range for each instrument, and we have an indicator that simply auto calculates that and overlays it right on our charts. All right, now again, there's a lot of lines here, but what you'll see is that there's a 10-day average range, and then there's extensions of the range. So the more you familiarize yourself with this over time, it is easier to read. It's a little messy today because the market's really extended well past the normal ranges, and right now it has skewed at the end of the day some of the levels. But you can clearly see here that the S&P and the NASDAQ both hit 200%, all right, of, well, in the S&P it's 200% of its 10-day average range, and the NASDAQ hit 162%, right, one of those Fibonacci numbers, of its 10-day average to range. Okay, so what do we use these for? Think about using average to ranges as if you're like on a football field. Okay, and you have your 50-yard line, and you get your goal lines, you know, your end zones, and so where is price, right, on the field? How much further can price potentially go to reach the goal line? So the initial goal line would be the 100% average to range level, and then there's, you know, adjusted extensions from there. So it's just basically a starting outline each morning to say, here are the range potentials, here is where price currently resides in trading. If the market wants to go higher, well, what's the potential? It's in no way predictive, but I will say that the markets tend to want to satisfy the range. That is a general statement, but in essence what it means is the market wants to satisfy the range. It wants to move, right, to various range points. So the markets trade from balance area and zones, right, to expansion zones, right, and within the context of those expansion and balance areas, creates certain 10-day ranges, all right, over time. And so as such, what we do is we measure those. That equates to the 100% of the 10-day average to range, and then we measure 127%, 162%, 200%. And today the markets had an explosive move upside, and so as you can see, they extended higher outwards to the extreme kind of edges, 200 and 162% of the 10-day average range. All right, so that's what you'll see there. Again, using it more kind of for initially planning, as well as ongoing assessment of how much further potential the market, you know, has on at any point in time during the session. Okay, and our next block of charts, now we've gone down to the 5-minute chart. Now this is referred to, these charts here are referred to as our balance chart, and the reason why they're referred to as the balance chart is there's a number of indicators on here that represent various pieces of the profile: upper value area, lower value area, point of control. We also measure the initial balance, the opening range balance, or the opening range rotation, the initial balance particularly. All right, so that's why we call it our balance chart, and it identifies the first hourly high-low, as well as provide targets for the first hourly high-low, etc. And there's other labeling in there, previous close, etc., etc. We also have a CCI indicator displayed on them. Again, these are 5-minute charts, so we want to identify, again, time-wise, we want to identify where the big levels reside as well. So again, it's just, we're getting a bit more granular here, but again, as you can see, they all pretty much are the same. They're exact same template. So as you work through your studies, through the material on the website, we have actually a workshop particularly named the balance chart components, and what that particular workshop effectively does is it takes the S&P, and what I do in that workshop is I strip out all the indicators to a bare 5-minute chart. And then throughout the course of that workshop, I add one indicator at a time. I explain what that indicator is and what we use it for, and then add another indicator. So I'm basically layering indicators one at a time. So as you progress in that particular workshop, understanding what the balance chart components are all about, you'll get a better understanding of that. All right, so that's what the balance chart is. So from this point, we can drill down to, we start getting into a little bit more strategies. All right, and we'll talk about the opening range strategy in just a moment. All right, so the next section is still, we're on a basically 5-minute charts. The NQ is a 3-minute chart. But now we've have a specific indicator and strategy on here called our opening range rotation strategy. And again, there's detailed information on the website about the opening range strategy and effectively how we trade it. This particular viewpoint is specific to the opening range, whereas we measured the first 5-minute, or in the case of the NQ 3-minute, opening range high-low. We identify the high-low and midpoint of that opening range, and then the software, the indicator creates target levels, both upside and downside target levels, to work to achieve. Okay, and so these target levels are valid throughout the session. They can be referenced at any time during the session for potential, just like the 10-day ATR would be, to see how, what upside targets potentials are. And each of these targets basically are calculated on a non-correlated basis. So the calculations that we used for targets here are different than the initial balance targets. Okay, and so forth. So what I like to recommend for our members to do is, as the day is unfolding, you may want to say, geez, what's the next potential target zone? As the market is moving higher, what's the potential? Don't know if it's going to get there, but what's the potential? And so, as you can see here, clearly the NQ exceeded its opening range potentials and went much, much higher. The S&P did achieve target 4, and we're up at target 3 roughly on the crude oil throughout the day. Again, they're designed to give you structured target levels. Again, they don't always get achieved, but it's a very clean chart, and it to ask the question, what are some further potential targets? This would be the area to go to. Okay. Okay, so the next set of slides here, a set of charts, is now we're drilling down into what we typically will look at and monitor throughout the course of the session. And these are our more granular execution charts. So we always look at the big picture, and then once we have a sense of the big picture, all right, we drill down, and this is where we do where we get most of our intraday signals and levels that we can trade from on a granular level. All right, so again, same principle applies. All 3 charts basically show the same information, although each of these charts are slightly different in that the crude oil and the S&P are tick charts. And in terms of the crude oil, we're currently using a 500 tick chart. On the S&P, we're using a 750 tick chart. And on the NQ, we're actually using what's called a Flex Renko chart. And we use a couple different Flex Renkos. There's information on the website on Sierra Chart about flex rank codes. Excuse me. So feel free to explore the Sierra Chart for more detailed information about flex rank codes. But again, in each instance, we're looking at the same thing. We're looking for the same thing in terms of structural setups and so forth. So if you take a look down at the Scanalyzer dashboard yet again with that white area, as I mentioned earlier, the three sections, categories of trade setups fall under average true range, ATR, stackers, bull and bear stackers, premium and discounts, which is subdivided into standard premium and discounts or turbo premium and discounts, and then extremes. All right, and again, the signals are generated on that Scanalyzer dashboard as well as directly on the screen. Now, with all these setups, the education gives you all the parameters, all the details about each of the setups in the membership materials. All right, should you decide to be a member, or if you've recently become a member, then that will be the the education part. It is important to understand how these setups are created, and so when you start seeing the setups generating the signals on the screen, you'll know how to interpret them. With time and practice, you'll get much better at them, and with my ongoing intraday guidance, we will work to keep you focused on which ones to be looking for, and also suggesting which ones that are more probable to take, which in other words, which signals are of higher quality than others. Though the signals are algorithmic based upon mathematical equations, they are not always, every signal is not always going to be a signal where we want to take. We want to be somewhat discriminating on the type of signals that we take, and there are specific kind of subcategories of signals that we want to take in terms of, for instance, first pullbacks following a shift of the ATRs, so the average true range of the individual chart will shift from bullish to bearish. What do I mean by that? Let's take a look-see. Let's spread out one of the charts here, okay, and you'll see here. All right, let's drill down here a little bit in the S&P. This was today. Okay. Now again, a lot of information there, but again, don't get too intimidated by this. All right. Once you understand it, it's fairly straightforward, and it actually gets much simpler. There are two ATRs on our screen, the average true range. You'll see them, the yellow line and the magenta line, and then it switches to the white line and the blue line. Also, to make it a little bit more visually easier to see, we've colored the background accordingly. So when the background is red, that darkish red, what that means is that's a bearish ATR background. Okay, so in other words, the ATRs have shifted to a bearish formation. And obviously, conversely, when it's a bluish background, that means we're in a bullish ATR configuration. Very easy to delineate instead of just looking at a black background, right? And seeing a colored background will reinforce what type of signal that that we're looking for, okay, and then what's in effect. All right, so once that occurs, what we're really looking for at that point is we're looking for pullbacks, all right, that will get us in alignment with the direction. And again, kind of referencing the Scanalyzer dashboard here, we talked about, you'll see a trend shift, ATR shift, And then along with that, what you'll get is a bull or a bear stacker formation. So in the case of a bullish transition here, all right, you'll see that the background went blue because the ATR shifted. All right, the color bars also, again, that's an enhancement for some of our members. They like to see the color bar change, all right, as well. So there's a transition there. And once that occurs, we're looking for some type of a pullback. All right, we don't know how shallow or deep it's going to be, but after the initial thrust, and by the way, the shift in the ATRs signifies that there's enough energy in price to change the dynamic from bearish bias to a bullish bias, and vice versa. All right, so again, this is a new direction unfolding. We do not want to be shorting this. We want to be looking to get on board this as efficiently as we can, looking for some level of a pullback. All right, the S&P will have a different value pullback than, for instance, the NQ or even crude oil. But once the ATR has shifted, right, the momentum basically has shifted from bearish to bullish. And so this is the time not to be thinking, because it's a higher price, I want to short them. Rather, you want to be thinking, the momentum has shifted to a stronger status. I want to get on board the new developing strength as efficiently as I can, as early as I can, and as low as I can. Okay, so what we're looking for is some level of a pullback, and we're looking for, we'd like to get a discount to some degree, but on the early shifts, you may or may not get a discount. In this case, you did get a discount, and it's a turbo discount. Remember, as I mentioned, the turbo discounts are much more sensitive, and they generate quicker and on shallower pullbacks. So that's the type of signal that we're looking for. Is we're looking for an entry or a signal that is relatively shallow, because that's what we expect. I don't expect a deep pullback because the momentum has shifted. So with that shift in momentum, we're looking to get on board. Okay, and the signal there, and you'll also see in the text area here, you'll see in the background, you'll see bull stacker. So the software generates the signals. They'll display it on the chart. You'll also see it in the Scanalyzer dashboard below, and you'll also, if programmed, if enabled, you'll receive an audible alert. Okay, and these are signals that are to be heeded. You know, again, this is what we're looking for. This is the whole idea. We want to be alerted to a shift. And then once we're alerted to the shift, we want to know, okay, where can I get in on that shift? Again, at the lowest possible zone, efficiently, and as early as I can. Right? Those are the three kind of, you know, criteria we're looking for. Right? As efficiently, as low, or, you know, the best price possible, and early. Okay, so discounts or slight pullbacks to the ATRs offer great solid levels to consider to get in on these trades. Now again, we're always looking for what's called the first pullback trade. All right, and again, many times the first pullback is not that deep. It's fairly shallow, but this here, as we look on the S&P, qualifies for the first pullback. The indicator that you see down below here is our CCI, Commodity Channel Index. It is a modified CCI, meaning that we have our own proprietary settings. All right, there's nothing that you need to program. All programmed in for you. All right, everybody uses the same setting signals, and they work fairly effectively. The final subgraph down here is what's referred to as the bid-ask volume ratio, and this is a Sierra chart indicator, and we've added that as an additional visual because this measures or displays the net buying and selling, or the initial net buying and selling of volume. So for instance, if the if the volume is being transacted on average on the offer side of the market, it's going to display green above the zero line. And if it's opposite, if it's the majority of action and trade is being transacted on the bid side of the market, it will show up as red. Now, this is not actual volume. What this is a representation of the aggressiveness of buyers or sellers. So if there's persistent offer side transactions, regardless of size, it's going to display in this bid-ask volume ratio. Okay? So that's important to know, because as the market is gaining new momentum, you want to be able to get on board when there's a little pause in the aggressiveness of everybody, getting in. So as you can see here, for instance, on that pullback in price, we also saw a little pullback here on the volume ratio, meaning that the buyers kind of backed off a little bit and let the price come back in. So instead of just keep paying the offering, they were paying the offering up to a point, and then they said, all right, let's back off. Let's see if we can get them cheaper a little bit. So again, that's where you end up getting the pullback. But they're still engaged and looking to buy. So this gives us our opportunity, right? If we weren't the initial buyers, we now want to be thinking of getting involved on that, on the long side. So a little pullback in price allows us to get in at a slightly better price than the early buyers perhaps did. They bid it further up, and now it's pulled back from that initial thrust high. So that's where we want to buy it. Right? Pretty straightforward, but again, a lot of people don't know where to get in. So the tools that we have help in that regard, help answer the question, where do we get in? And based upon a statistical measurement in terms of price action pullback, which is what our CCI measures, is we're looking to buy at a so-called discounted price to the most recent average price. And when price has dipped deep enough, let's call it, to be able to get on board efficiently. And okay, so that is the idea, what we're looking for, and how we use our ATRs combination with the shift, and we're looking to get on board early as possible. And then as the market subsequently continues to move directionally, there will be opportunities where the prices will pull back slightly and or somewhat deeper. So this would be a case here where we had another discount turbo in a fairly strong up move, and price got a little bit ahead of itself and pulled back. Now this pullback was deeper. So again, down here on the Scanalyzer dashboard, you'll see premium and discount, and then you'll see turbo premium and turbo discount. The early signals there that are showing the cyan color with the yellow circles there that I drew, those are turbo discounts. All right, what they simply mean is they're a much more sensitive signal. Now the standard discount will be displayed with the fat white arrows as you see here, okay, on the next signal. Now many times what will happen is on that particular pullback in price, that price will usually come down to the next ATR level, which is as I've depicted it here. It's a fatter line versus the inner one. And the reason for that is it's a larger ATR, it's a more significant level, and the expectation here would be very simply that as prices come down at or near to that ATR level, and you see also there's a discount level here as well, That is a standard discount, and that is a buy signal. So what we want to do in this case is we want to look to buy coming off this area or in this area, not into the area, but once it's there, we want to evaluate through other means, perhaps looking at the bid-ask volume ratio down here, looking for the sellers to stop selling it, hitting the bid, and then the buyers begin to pay the offering. That would be a very good signal to generate with. So we could put like a little line here. And as you can see here, once the sellers stopped selling, we were in the discount territory. And when the buyers began buying it, right, as the price started to move up, we had a buy signal, and that would be the location that we would look to buy. We would start, looking to buy a position there. All right, so the CCI, how we have it along with the ATR, offers us a very good statistical pullback zone from which to look to take an entry. And as you can see how this played out very well. Okay, so this is the core of what you'll see, what you'll be looking for as prices unfold throughout the day. All right, these are the areas that we want to be looking to take trades. All right, we're not looking to run after price, and price has momentum to it, but we want to be looking for areas and levels where we get, whether it's a shallow pullback in price, if the momentum, the initial momentum is strong. Remember, when the initial momentum is strong directionally, it's less likely that the market is going to pull back significantly, right? Because there's new momentum developing. So we have to then be aware that although we mention a lot in our trading room, we want to buy a pullback. In fact, what we're basically saying is we want to get on board as efficiently as possible, as early as possible, and at the hopefully the best or lowest price possible, but not necessarily the lowest price. All right, so we want to get on board. So the bull and the bear stacker categories generally will signal along with or very near to the ATR shifts. And the ATRs are structural shifts in price that have new momentum to it, and then again we're looking to get on board. So the stacker is also an additional layered signal that tells us that the market is in a new directional trend. Okay, so you can take these concepts and move them over to the NQ, or you can move them over to the crude oil and work them the exact same way. All right, they're read no differently. All right, the chart may be slightly different. So for instance, we'll take a look and we'll round out our discussion here with the NQ. Okay, and so this is an example of what we did today. All right, let's take a quick look at the early trade. Okay, what did we have here? All right, we had a shift in our ATR. Okay, so let's walk through that. So we had a shift in our ATR right in here, and then we had a so the market came down and we had a bounce back up to the bearish ATR, the red line there, and this is where I took a trade on the short side. Okay, pretty much right near to the line, and as you can see, at that point we were in a premium territory on our oscillator, and then we were I was just simply looking for a trade. This was kind of a shorter term, kind of a, I don't like to call them scalp trades, but kind of a shorter term trade, just to see if it tested the lows down here, or if it could break the lows. So I was looking to, we sold the premium, and then we just simply we bought them back here on the way down. But the key point on this is not so much the trade itself, but the structure of the trade. and so we had an ATR break, and then we looked for the first pullback to the ATR for an entry, took that entry, had a successful trade, out of it. So guys, this is what we're doing. We're not trying to necessarily get, 15, 30, 40, 50 points out of every trade. We're looking to take trades at specific locations, okay, when the market offers us the correct configuration, and then take that trade, and again, in terms of making, 5 points or 10 points or 8 points or whatever it may be, we're looking to take, we're looking to book profits from these things. There's no question. All right, that's what we do. But you notice, we're not just taking trades at any random level. All right, we're taking trades on specific locations. All right, that we have shown and we have tracked to show very good and very bullish results, or very positive outcome results from those particular trades. So I know what probabilities favor first pullbacks to the ATRs. That's a high quality, high tight probability trade. It certainly has its risk, but the risk, what we work very strongly to do is to certainly minimize and mitigate the overall risk. Some of you just, as I'm looking at this particular chart, some of you may recognize some traditional patterns here. One of the traditional patterns is a wedge, all right, a falling wedge. And these wedges, more general technical analysis, tend to lead to strong breakouts. And as you can see today, this particular one did as well. So once the price has broken out, all right, what's our objective? Our objective is to obviously get on board as early as we can, but in a case where the NQ is again, it's S&P plus on steroids, all right, and it can move fairly quickly. But you can see potential opportunities, all right, although they're not necessarily discounts in this case because the momentum was so strong. But you did have maybe about a 5 or 6 or 7 point pullbacks here, all right, from the high peaks that offered a potential opportunity to get on board. Now, I did not trade those. Those are pretty hard to trade. You have to be really, really aggressive, to get on board there. But it is possible, and it's just like getting on a fast-paced train. You just got to get on, and then kind of ride it. What I did today, all right, is we waited for a bit of a deeper pullback, and this particular one, all right, qualified for the first pullback, even though after a fairly strong rise in price, it still qualified for the first pullback because we really didn't get a first pullback following the breakout. Again, that triangle wedge was fairly strong. So this case here, we did get a pullback to the ATR, part of our criteria. We did get an extreme signal, so when you see a star, that indicates that it's at an extreme point on the CCI oscillator. And in this case, we had a discount signal. So everything really kind of came together pretty well here in this example today. And as you can see, my live trade in the room, all right. I bought a portion, and then it came down a little bit. I added to that, and then as it moved up, we scaled out. And again, I took profits. Obviously, looking at the chart in hindsight, profits, decent profits. Again, this was about a 4 contract position here, and this was a decent profit trade. I would take this trade, every day. And again, I exited it near the prior high here, all right, which, again, at the time, you just don't know whether or not this high is going to turn out to be, the current high and stop the upward progression or not. All right, so again, we want to be able to, the goal here is to be able to buy in the proper zones, all right, with minimal risk, and that's what the CCI offers us an opportunity to do, in alignment with the directional move on pullbacks, and then scale out. All right, take profits, and if you're trading multiple contracts and you want to then hold on to it, and then for whatever higher prices potential is, you could do that as well. Okay, this was kind of a late pullback here. Didn't really qualify for a discount or anything, but you did have a pullback here similar similar to this one. So if we kind of measure a kind of a pullback here, and then we do a copy and move, all right, you can see the pullback here was of similar magnitude. Now these type of pullbacks are referred to as symmetrical pullbacks, symmetry. Symmetry is defined as similarity or likeness in swing, and in this case the swing was a pullback down. And so this was one, though it was late in the session, and then there was some news that popped out shortly after that, all right, that vaulted price up. But this was clearly a good opportunity as well for those that were targeting that, all right. But again, you can see the structure. Pull back to the ATR. We have rising moving average here, all right. Everything is in an uptrend condition. We want to look to buy that pullback at or near the lows as possible. And actually in this case, though it didn't reach the discount area, for those that were fairly astute on this and recognized it in real time, there was some divergence, positive divergence. So that would have been an added kind of bonus to say, hey, I want to take that. We got a bullish divergence there. Okay. So again, the similarity of taking the trade, you would just wait for the pullback to finally conclude and then look to buy what we call the right side pivot rule, all right, as prices come off the low and the buyers start aggressively paying the offering, we would then look to get in. All right, so these are the things that you'll see throughout the day. These are some of the setups that we will primarily focus on throughout each and every day. What we focus on does not change. Okay, there are variations to what we do, but these are the core setups that we want everybody to focus on, and we'll add particular setups, and we'll discuss the market conditions as they currently unfold. But one of the primary premises of this whole group and the methodology is we are directional traders. If you want to categorize it as a trend trader, that's fine. We are not counter trend traders in any way, shape, form. All right, we want to stay in alignment with the dominant force, and if that means that means never fading a move. So the strength today, all right, for those that were shorting it, all right, I don't know why they would be, but for those that were shorting it, then they obviously had a tough day. For those that were staying in proper alignment with the market, of which we want to do, then it's a much less stressful approach, and we're just simply saying, okay, I want to wait for my poker hand to my straight, my royal flush to come together. I want to take it when the signals are in the proper alignment to get on board the existing directional move. All right. It sounds simple, but it does take a fair amount of effort to stay focused on that, and we do hopefully a very good job for you guys to keep you focused in that direction. So this is what you'll see every day. This is the software that we use, and for new members, okay, some of you that are currently have just joined up and you're watching this video, you'll be on your 30-day trial. For those that are watching as guests and considering at some point to become a member, when you do become a member, we do offer a 30-day trial to the software. So we'll get that on your desktop. We'll get the same. You'll get exactly the same workspace that we're viewing here, and we're all on the same page. So there's nobody that is left out. All right, and when we say, hey, there's a discount here, or there's a premium there, or there's a bull or a bear stacker developing, everybody knows exactly where to be looking, and then through the education, know what to be and how to be trading them. Okay. Does anybody have any questions? This basically concludes the formal review of the PTG Trader Toolbox. You can visit the website for some specific information about the PTG Trader Toolbox. We have a list of free videos that kind of explain a number of the different indicators, so feel free to explore that at your leisure. There's a ton of information on the website in the members area, okay, to be used, you know, to watch the videos, so get the most benefit out here. Okay. Question: I use interactive brokers with Is that Thinkorswim? Oh, what's TWS? I don't know. Do I need to move to another? Oh, it's their platform. Okay, I'm sorry. Yeah. So if you decide that after your trial you want to, you'd like to join the educational membership, okay, and then as a new member you'll receive a 30-day trial to the platform. We have it coded primarily on Sierra Chart. We do have a NinjaTrader 7 version, and we have a another version in terms of TradeStation, though it's not as comprehensive as this. So I would say that the Sierra Chart version is the most comprehensive and complete. That's where we have the majority of our members on. Yeah, Sierra Chart is a fantastic program. I mean, I've been using it for well over 5 years, and they've come quite a long way since when I first began using them. And as you can see, I have an excellent programmer, and the coding that I've done, on this is, and what he's done for me is just absolutely fantastic. All right, very clear, very clean. It's and accurate to what I wanted to display. So it's a great platform. Now, if you're with a different broker and a different platform, we can get you access to through Infinity Futures. Okay, the markets are kind of stopping here today, right at this point, so we're starting to get these notices. But we can get you hooked up with Infinity Futures. We have a turnkey solution, right, where you can have access to their trading platform as well as access to the Sierra Chart platform as a turnkey solution together. So like what you're saying, you have IB and their platform is TWS. Okay, so it integrates with each other. Same thing here with Infinity Futures and Sierra Chart and PTG indicators. So it's a very turnkey solution. All right, that's something that at some future point, in your trial, if you're deciding that you're interested in becoming a member, we can discuss, individually what your individual needs, are and would be to get access to this type of information. All right. All right. So I'm going to formally, if you have any other questions, we can address those. But I'm going to formally end the presentation here for recording purposes. And again, I want to thank everybody for attending. That is a guest with us, and for those that are new members that are viewing this particular video for the first time to get an orientation, congratulations on that, and hopefully this has been helpful to what you're seeing, and good luck with it, and I am always here to help everybody, so feel free to reach out to me as necessary. Okay, so for any additional information and questions about what you've seen today on our workshop, feel free to reach out to me. Best place is the email address at david@polaris-trading-group.com, and of course, explore the website polaris-trading-group.com as well for other information on there. All right, so again, I want to thank you very much for attending, and good trading to all. Thanks.